Microphone is hot. Ben Cameron, great to see you. Rob Milne.
Got it.
Brett Hart, always great to see you every call, sir. RJ Adam Powers. Okay. I think we got the, we've got the main crew in here. I think whenever you are ready, Scott.
Thank you, Ian. Good morning, everyone. Good morning, Caroline. Good morning, Ian. Good morning, Paul. Paul, did you want to talk about some price action stuff before I sort of influence everyone with my opinions?
I would like your opinion first, and I'll come in with my opinion to most likely be correct with yours.
All right. Okay, so I'm going to look at Bitcoin first. Bitcoin, the first thing to notice is how low the volatility is. This is ATR as a percent, which is ATR expressed as a percent is more useful for instruments that change a lot in price. Because if you're talking about the average true range, it's the average range of the last 14 candles, right? The average range when we're at 60,000 is very different than the average range when we're at 20,000. So you have to fix that by using it as a percent. Irrelevant for intraday, but for just something to note for long term. So what we see here is we have the lowest volatility since right here. Now, what happened right here? This was the point where the shit fell off. Let's look at some other low volatility points right here before the shit fell off. And it works in here and here, just before it blasted, right? So these low volatility points are quite often, you can see here, right before it blasted off, these extremes of low volatility that stand out tend to be places where direction unknown, volatility is about to blast up. And what is low volatility? Low volatility is boring. I think we can all agree that this has been a really boring market the last couple of weeks, so much so that it's just painful to cover it, right? Mm-hmm. And if we look at these points here, here, and here, we can really say the opposite. This was fascinating and exciting and high drama and high expectation. But as humans, exactly like being on a roller coaster, we're not built to be scared for too long. Like if you're on a roller coaster and you go around 3 or 4 times, it's not scary anymore. It's only scary. You can only stay really scared for a short period of time. So here we have a high chance of an explosive move in direction unknown. Now, on the face of it, this looks like we're going to try and break out above here. This was a perfect spot for bears to get position. Top of a trading range, there should be, and top of a trading range and evidence yesterday that the bears had pushed it up and put it down. They have rejected that. A close above here changes things. A close above, not just a test and a fall away. So this could go either way. The bulls have the slight edge here. What happens if we get above here? Well, there's some resistance here and there's some resistance here. This is a very dangerous time to get positioned long because you're getting positioned long with the chance of a whipsaw as it runs up into resistance here. This support and resistance isn't like magical because we drew lines on a chart. It works because people remember the prices that they paid. And there's a natural thing, I'll sell out when I get my money back. This game sucks. I want to play Hungry Hungry Hippos. But I'm not selling out for a loss. I bought at 29. This was a nice place to get positioned. I got fucked. I held through the storm. Now, if it gets back to here, some people are going to take the bat and ball and go home. This is baked in. This always happens. This is the mechanism behind double tops, and you can see it here, and behind support and resistance. So if we break out to the upside here, we could get quite a convincing move to the upside. It would take a lot to break through this. This is still bear market looking stuff, right? I know the bulls are saying that this is what a bottom looks like. I've never seen a bottom of a major market look like this. I've just never seen it. So this does not look like a major bottom, but that being said, that the market is really quite strong. Let's look at the other things that are driving it. Most obviously, the E-mini is very strong. Now, one thing I want to point out here, sorry, is when you see a shooting star candle is a failed attempt to drive the market up. A shooting star candle emboldens bears. So the bears who are thinking about getting positioned go, that's a top, I'll get in there and I'll short it. You see that, and then look, we gapped up the next day, broke the high, closed above the high. This is very strongly indicating that this market wants to go up. How do we know it wants to go up? Because it's ignoring bearish setups. The bears can't even push it below the low of the previous day. And we had it from a very low in volatility, not quite an extreme low, but pretty low. For the first time, we've broken this pattern of lower lows. By breaking this at this point here, we're no longer in a bear market. As weird as it sounds, we're looking at the possibility that this market is going to make an attack on, first of all, this one. And if it gets to this one, to make an attack on here. And if it gets here, well, fuck. Everyone who sold out in the last 6 months is going to have to chase it. If it gets above here, it's going to run. Weirdly as it sounds, insanely as it sounds, actually, too. Now, let's look at gold. Is a little bit stronger than all the other risk-on things, and still going up with the stock market going up, and gold is looking very solid. No retest yet. So if you want to look at, if you want to get a rough idea of how strong a move is going to be, one of the nice places to look is at the start. How long does it go before it starts its retest process? So we're not in a bull market, obviously. It's been going sideways for a year. If we are to start a bull market, it has to retest first and then go. So two things are relevant. One, how far does it go before it retests? And two, how deep is the retest? Is it just to there, or is it all the way down to there? That tells us a lot. So you can see previously in the Corona crash, it went up a long way before the retest, and the retest was not so deep. This was a sign that this was going to run. If we look right at the very lows, we have, an RTV pattern, but we have no meaningful pullback for a long way, and then only a shallow one. This is a sign that the market wants to run. Okay, so let's look at interest rates, because interest rates are really quite interesting. Last week we drew this, and I didn't want to delete it off my charts. The move down has been shallower than we expected, and interest rates are clearly going back up again. So we have this incredible disconnect between what the market is discounting. So don't forget, the stock market is thinking that Jay Powell's done his job, inflation's starting to get under control, and they're gonna turn the money printing faucet back on, and money printer go brr, and everyone's gonna make money. That's very clearly what's being represented in the stock market, and yet the interest rates are just showing the first signs that we could get above here. If we get above here, interest rates are going up. We've got set-in inflation. So we've got this radical disconnect between what the bond market's saying and what the stock market's saying, and who's going to be right. I think they're probably both going to be wrong. To me, the highest probability is stagflation, which is high inflation and low economic growth. Okay, moving on from there. Okay. We have this straight shot continuing with Ethereum continuing to outperform Bitcoin. It's coming up to the top of its trading range. This should have some selling pressure somewhere at the top of this trading range. And that probably coincides with what's likely to happen if Bitcoin breaks outside of its range. And you can see on a daily chart, Ethereum is leading the way, decreasing volatility, bull move, not quite at an extreme of low volatility yet. So it's likely to go a bit further, likely to get into this sort of resistance zone up here. So we've got a little bit more to run in Ethereum at a minimum.
Yeah, the merger's coming up, so there's a lot of
Yeah.
buying interest in it.
Exactly so.
All of a sudden, you can get interest on Ethereum.
Point and really it comes down to, is the merge successful or not, right? And I'd be interested in your thoughts on that are probably better than mine. So this is okay. So the last week or so, Ethereum outperformed most alts, except for a couple of random bullshitters, which don't really count. Sol did well. Atom did well. Decred had a big pump last week, so that's normal. This is looking a bit more consistent, a bit more convincing, right? We're not seeing the garbage at the top, except for these, which just got dumped on before. Let's take a look at some individual ones. Extreme low volatility in Sol. AVAX, bull flag, or an RTV sell, could go either way. Because was at the top. Wow, that's a strong move. ADA, because I know Thomas will watch this. Extreme low volatility point, could go either way. Yeah, I don't know what to read about that. Paul, do you want to do your bit, and then we'll look at some Glassnode stuff.
I was just going to emphasize exactly what you were talking about in the chart, so I'll just share my screen.
Please.
Because I found it very interesting. Bear with me.
Paul doesn't have
Okay.
he has a literal command center.
You can see I'm looking at actually CME Bitcoin. So what's interesting is the European market last night pushed Bitcoin down, and then CME came in and pushed it straight back up again.
Very interesting, right?
Yeah, very interesting. And I've got exactly the same bands of resistance as what you have, and I've got a pattern on there as well. So technically, for all those traders who follow technical patterns, what should be happening here is it should be hitting the top, and then in the end of this wedge, it should be dropping the arse out of it and going and retesting a low. Whether you believe it or not, is another question, but you do have support and resistance above and below, but this support and resistance above is fairly strong when you start to look where it came from on the way back and where it's touched down. So it was also very interesting, the fact it was a false break up. I think it's going to have another go at it, exactly the same as you.
Yeah, it looks like it, doesn't it? I think we've got to view it in the context of what is the maximum pain trade? What is going to fuck the most people around? And I think a fake breakout to the upside here would really confuse a lot of people. Sucker them in, say, oh well, maybe I was wrong. I was waiting to try and get my Bitcoin at 15. Fuck, I'm going to miss out if I don't jump in at 25. Fuck.
Well, you can see the bears are having a real hard go at pushing it down, less and less so. So it looks like the bulls are gaining control.
I think so. And what's interesting is after the bears give something a red hot go, they take about 3 days to recover. So they've had a couple of goes here, a couple of serious goes and they've failed every time. So they are weak. I don't be able to muster any sort of attack for at least a couple of days, at least 3 days, probably 4 trading days.
So we'll see what happens on the weekend and see how it opens up next week.
Yeah, I think we're looking, I think like you, we're looking at it going up.
Maybe
Just
tomorrow.
You mentioned about the, like the human element of what's happening behind the fake out, because in the AWCE, somebody, went in there and said, this is what I'm feeling at the moment. And I'm feeling like I should get in on that Bitcoin because it's running away now. And that's a conversation that's happening right now in the AWCE group.
By the way, AWC is pretty close to turning back on.
Nice. You think Bitcoin or ETH or?
It'll be ETH because ETH is stronger. But that, to me, that seems like, whoa, nice. Yeah, it's hard. That one's hard. Yeah.
All right, well, that'd be interesting to see where it goes. So with the Glassnode, Scott, you mentioned about the volatility being low. So is there the confluence? Are you looking for confluence, or like what's the metrics now that you've seen that low volatility? You thinking I need to?
Okay, so let's talk about what volatility is. Volatility is a proxy for the level of human emotions in the market. Markets naturally cycle from extremely interesting to extremely boring. Where are we on that scale?
Boring.
Like boring, totally. So what's likely to happen is that we're likely to get something really fucking interesting really soon, in direction unknown. Now, statistically, volatility is much easier to predict than price. Volatility is really quite trivial to predict. Price is not trivial at all to predict. In fact, almost no one can do it. Well, outside of the very short time, it's very difficult to do. So what we can expect is bigger candles and bigger moves in direction unknown. That makes it a very dangerous position to get positioned, because if you're betting long, it could really spike quite hard depending on how the resistance plays out, or it could fall off the plate completely. Like I couldn't rule out BTC 15,000 in 2 weeks. Very, very dangerous place. Very uncomfortable to get positioned in the AWC right now, but I will. Let me do some Glassnode stuff.
Okay.
So the first thing I want to see is the number of addresses with a non-zero balance. Completely recovered to all-time highs. You got a little dip there, but really, this is a market that in the long term is going to go higher. Like in the long term, the number of addresses with a balance greater than 1 at new highs, greater than 0.1 at new highs, greater than 10 Bitcoins at highs since the May top. So serious people balance above 100. Okay, so these guys are still out. Okay, these ones don't matter so much because very big holders have to continually sell into the market because it makes no sense to do anything else for them. If you've been holding since way back in the day, really you're looking to cash out. You're not looking to do anything else. Above 1K still going down, and above 10,000 going up. That's interesting. Let's look. I want to look at the whale balance just quickly. Okay, so the whales on average are not buying this rally. That's quite bearish. You can see they didn't buy this rally either, and it happened, and they didn't buy this rally, and that's what happened. They bought this rally, and they bought this drop, and then we had a big recovery. So I would want to see some signs of whale recovery before I get very bullish. Okay, let's look at some other stuff. Okay, let's look at the NUPL. In Bitcoin, that's substantially recovered. Up to average player is 12% in profit. Z score looks to have recovered. Exchange balances should be going down. That's what we want to see. No one's moving. See, you have to move your money to an exchange before you sell it. So before a crash, you see the clues here, and we're not seeing any signs of a potential crash. So I think Paul's right. In the short term, it looks like it's going to get. It looks like that explosion is probably not going to be to the downside because we would see a clue here. Hodlers are increasing their dominance. Miners are holding steady. Short-term traders, that really looks like a bottom in the short-term traders' realized value. This is a very plausible bottom from a lot of accepting the whales. Let's look at the dormancy flow. We should see long held coins sold at a top and short held coins sold at a bottom. This broke through previous records and now it's starting to recover. Very plausible bottom. Let's look at okay. The crypto margin futures open interest is going down, not quite so much leverage in the system. Let's look at the funding rate, very important at this juncture. Well, we're still a very slight positive rate. Let's look at it on an hourly basis. Okay, you can see that these spikes in funding rate have coincided with the short-term things, with the short-term drops, and the drops in funding rate have coincided with short-term bottoms. And we're like right in the middle here. So we've got really no signal from the funding rate. It's almost flip a coin stuff, but it's certainly not like a top. I think that's pretty important. No big spikes on the exchange inflows to worry about. And let's look at the net flows. Nothing big. No extreme readings. And we're looking for whale deposits to exchanges, indicating that they're about to sell and dump the market. We don't have any indication of that. This looks like it wants to go up. Well, let's just check Ethereum. Yeah, Ethereum funding rate is positive. Ethereum is looking not quite toppy yet, but Ethereum and Bitcoin look quite substantially different, I guess, as we expect here. Has anyone else got anything they want to add?
Yeah, Ben
Miners.
Reid in the chat. I've got a couple of good questions. Sorry
Yeah.
to Paul.
Ben, the system will turn on. It's most likely to turn on, actually, and it's most likely to turn on in Ethereum.
Mine.
Jay,
Sorry.
no, you first, Paul.
Miner outflows. I'd like to see what the miners are doing,
Sure.
because they've been having to, because of the lower price of Bitcoin, they've gone to the market when they've borrowed against their equipment there should be outflows, but with Bitcoin price going higher at the moment,
Let's look at that picture. Little bit, but nothing like we saw back here, right? Like no real capitulation. Let's look at the minor alpha multiple.
I'm just going to unmute Ben Cameron and join the convo. You're good to go when you're ready, Ben.
Hey, Ben.
Hey guys, yeah, good to be on the call with you. I'd have to agree. I think this weekend could be a rallying weekend. It seems like a Goldilocks scenario where we've got solid economic fundamentals out of the States with good job numbers, CPI down,
I agree.
PPI down.
I agree.
There's yields that are sub 3%. The yields are not exploding. We've got an S&P going through the roof. So it seems that crypto is undervalued relative to all these asset classes and should mean revert and take a run higher. But, you know, we've seen BTC have, I think we're up to 5 attempts to try and get through 25 now. And it seems the whole crypto sector is underperforming. And historically, you know, when we had these confluence of factors, crypto would explode, but it's failed to do that. So I'm sort of wondering if we do get so on one hand, I'm thinking it's all undervalued and it should catch up and we should have a nice rally. And on the other hand, it seems like a bit of a medium-term red herring when, you know, there's just a lack of interest, it seems. So.
Okay, so I'm not worried about the lack of interest because that's kind of what bear market bottoms should feel like. What I'm worried about is that we may not have had enough capitulation to really mark a bear market bottom. It's a very confusing market. Honestly, I don't think so. I think if it rallies over the weekend, we've got to be back in on Monday. I think that's just that's just what we have to follow the system rules. And Jade had an interesting question. Momentum only works if our fundamental stuff is all in line. So we have a bunch of different Glassnode stuff that goes into a point score, and it's been almost the last couple of weeks. This week it looks like it's going to get it over the line. So the momentum is only once we have a signal that it's safe to get back into the water. I don't think it's particularly safe, but the system is probably going to get us back in. Why didn't it get us in off the lows? The system doesn't work that way with momentum. It only works that way once we're long. Anything else, guys?
I'm just posting in the chat a video from your YouTube channel that explains momentum of the system.
Okay.
No, I think that's it. Oh man, that was a masterclass in price action. Thank you very much for that run through.
A masterclass, but we're doing okay for a Saturday morning.
Well, it was good fun. It was good fun. All right. Thanks, everybody.
See you guys.